Hey, welcome back to the channel, Fully Invested Phi Labs. Happy early Thanksgiving, everybody. I'll be posting this up today, so Thanksgiving's tomorrow. But today is episode 7 of the full Paycheck investing series. Again, this week, I'm going to be doing it a little bit differently, just because given Thanksgiving, I'm going to be busy on Friday, so I'm not going to be able to focus on YouTube or the Paycheck or anything. I'm just going to be spending it with family. And so, so today what I'll be doing is I gave myself a paycheck by transferring basically my paycheck, same paycheck amount from my HELOC to my Robinhood account. And once Friday hits and my actual paycheck hits, I'll just send that paycheck back to the HELOC to pay that off. But yeah, so with my simile paycheck today, I'll be investing that full amount as usual and explain my full thinking behind everything. And then also show how I live out of my brokerage by paying my mortgage today. So all this will be, again, uninterrupted, all in one take. And yeah, let's get started. So as usual, this is like the flow chart for how I live out of my brokerage account and invest 100% of my paycheck. If you want a deep dive of this, there's a video that you can see on the top right here where I really do a big deep dive on it. But the gist of it is that I invest 100% of my paycheck. I invested in 2 buckets, both in growth and dividend growth. So about 40% of my paycheck goes to that. And then the other portion goes to high yield income ETFs to generate monthly income. And yeah, I basically live out of my account, pay bills out of there against margin. And yeah, you can see that video to get more details there. And yeah, before we go any forward, as usual, this video is for entertainment and educational purposes only. I'm not a financial advisor. I'm just some dude on YouTube, and nothing here should be taken as financial, investment, or tax advice. All I'm doing here is really just sharing my personal journey, sharing my personal results. And yeah, investing always carries risk, especially when using margin, and may result in the loss of principal. So please do your own research before making any investment decisions. No returns are guaranteed. So yeah, let's just dive right in. So if we pop over to Robinhood to kind of see how stuff is. So yeah, nice green day today. Nice change after the last few weeks of downturns. But yeah, if we go over the portfolio, so I'm actually positive this past week, which is nice. But if we go over the month, I'm down 9.26% or 15K. So basically that bonus I invested over 3 months, down 1.71%. So basically, I'm investing a little bit into the bounce from the dip from last week. So like the lowest point was basically Thursday last week. But yeah, can't perfectly time stuff, but still down overall from when I last invested. So I last invested my paycheck here on the 31st. So still catching the dip there. So as usual, we're going to go with the first growth investment. So earlier this week, I got a Facebook privacy settlement payment from Meta. So that was like a $38 payment that I just threw into Meta as a starter position. But Meta has like gotten a pretty big dip here over the last month and a bit, right? So yeah, from like the end of October till now, like it was down like 21% at one point. So now it's still down 15%. And yeah, it still had great earnings, and they really just like dipped from just the capex that's going to happen for their AI infrastructure stuff. So, but their financials are pretty sound when you look at that stuff, right? Their revenue is growing steadily, their free cash flow is growing steadily, apart from that dip in 2022, which they fully adjusted. A lot of debt being put on because of all the capex here, but yeah, when you look at their numbers here, right? Like, yeah, they're growing 21% a year, or 18% over 2 years, or 18% over 5 years. Free cash flow, 23% on the year, 68% over 2 years, which is crazy. 5 years, 20% a year where it's growing. So yeah, amazing numbers, and the growth it's pretty steady. Amazing profit margins, 30%. PE is actually lower than the S&P, I think, or is the S&P 27 now? Not sure, but so I'm thinking I'll just do that. So my paycheck today is going to be $5,942.45. So yeah, if we go over here, you can see that I pushed over my paycheck quote unquote from the HELOC. So this is the amount I'm going to be paid on Friday, and then I'll basically just transfer that back to the HELOC there. But yeah, it's like, and as mentioned the other week, my paycheck is slightly bigger because I maxed out on my Social Security tax payments given how high my salary went this year, which is nice. So my last few paychecks here are going to be in the $5,900 range, which is nice. So, all right. So I'm going to do 2,000 as usual into growth. So let's minus out 2,000 here. And yeah, I think I'll just buy into Meta here. So do 2,000. All right. $2,000. Great. So that's purchased. And then for the next thing that I want to invest in, so now I have $3,942.45 left. So I'm going to split this into like two different buys actually. So if we go back to thing here, yeah, so I need to do some additional math here. So if we do 942.45 minus like the normal paycheck here, 5431.21. So the difference is 511.24. Okay. And then, so I'm going to minus that out here. All right. So the reason is that, so this will be the high yield portion. So I just want to invest this as normal, as if it was a normal smaller paycheck. And then this is the extra that I have from, yeah, just the taxes not being taken out for Social Security. So yeah, what I'll do is that this will go into a high yield ETF, and then this will go into a new hedge position that I'm thinking of that I'll talk about after this. So yeah, for the high yield ETF, we'll go with this essentially. And yeah, what I'm thinking for that is actually QQQI. So I've been talking about getting into NEOS for a little bit now. So either SPY or QQQI, and I'm leaning on QQQI here. So if I compared them and say like TDAC, I was kind of contemplating both of these. They kind of like have the same underlying but have different strategies. TDAC is like a 0 DTE covered call, and QQQI is like a more standard covered call, but like tax efficiently given that they're doing it on the index. So yeah, if we go over the month just to kind of see how both of them performed given the recent dip. So I'm just noticing that QQQI stayed a little bit less volatile. Like it's actually down 2.38% on the month, and Tap Alpha's down 3.47. So it got hit a bit harder, I think, maybe because of its 0 DTE strategy. So yeah, I think I'm going to go QQQI for today. I might also honestly still invest in TDAC eventually. Like I'm kind of all for having a diversity of like how they're generating income on the same underlying index. But yeah, I think I'm going to do QQQI today. So yeah, let's do that. Yeah, so even if we compare TDAC, I'm curious what... Yeah, so QQI is actually up a little bit more today. So you can kind of see there. So TDAX or QQI is down 2.15. Yeah, so just a little bit less. So I think I'll go with that, given that it's, yeah, I just want to invest in something a little bit more NAV stable and not as ultra high yielding as I've been doing with like WPay and Ulti lately, given the recent downturn stuff. So yeah, I just want to introduce a little bit more stability and diversity in the portfolio, given everything. And not that I'm going to stop investing in like WPay and Ulti and stuff like that, but yeah, just for this week, just want to be like, quote unquote, risk off a little bit and just introduce a new position here. So let's put in a buy order here. So for 3,431. So for QQQI, cool. Great. So that's QQQI bought. And yeah, now for the last thing that I want to buy. So now I have 511 and 24 to invest. So what I'm thinking, so again, in the spirit of like, yeah, just kind of making some slight adjustments based on the downturn. Like what I want to do is not necessarily sell out of anything or do anything like that. There might still be some rebalancing I do down the line, but like for now, I just want to basically add more diversity to the portfolio and kind of add some positions that are a bit more uncorrelated to the market. So in that spirit, I was looking at different things that people suggested, SPY-H, QQQH, especially from NEOS. But I just had the thought of, and kind of seeing a couple others do it, but to add some gold exposure. So I landed on IAUI from NEOS. There's also KGLD that looked good as well as far as curve. It seemed a little bit more risky, their strategy, and like more aggressive as far as kind of getting income from it. Just because like from gold, in general, in the past, I haven't invested in it just because it's not like a cash productive asset. Like I kind of agree with like Warren Buffett in that sense. But now that there's like this options overlay over it that generates the income, I think that's a little bit more attractive to me. So right now its distribution rate kind of hovers in the 12% range, 12.96%. So really compared to like my margin interest, which is 4.75%, really like I still have like an 8% spread on this given the yield. So yeah, and what the thing that I like on NEOS' fund compared to KGLD is that they actually have like a good amount that they're holding in physical gold too. So like just under 25% on top of all the options. So I do like that. And so you get exposure to like the upside there. Not as much as KGLD from what I was seeing as far as like, if we look at their stock, right? Like if we look over the month and yeah, so KGLD is up quite a bit actually. But yeah, I think I'm going to do IAUI, and I don't know, I could eventually do KGLD too. But today, I think I'm going to do IAUI here, and yeah, just and NEOS in general, I think from all the research I've done with them and seen their videos over time, is like I like how tax efficient they are with all their ETFs, as far as like yeah, just keeping that in mind. So that's the same for QQQI, and it seems like that's the same for this ETF as well too. And yeah, so let's do that. So yeah, because like again, like what I mentioned with like the monthly puts that I've been doing, like I didn't quite like the monthly management of it, and also just the timing of it and whatnot. So I think I'd rather just have some like positions that are a bit hedged and uncorrelated to the market, just so like on days where the overall market is down, those positions can kind of like pick up the slack. So I think like gold comboed with like SEHD will be great hedges in my portfolio to kind of basically take the baton on down days. Of course, SHD can still kind of be exposed to like downturns, so I think gold will be a good complement there, where it's like a bit more uncorrelated to things, right? So yeah, the money I'm going to put in for this is like 511.24. So actually, funnily enough, this is actually like what I've invested or not invested, kind of thrown away so far for monthly put insurance. So yeah, it'll be nice to actually just feed that into portfolio rather than just kind of putting in a position that I'll have to roll over and I just lose that money with the market going up. Just because like in the end, over the long term, like there's a lot more green days than red days. So I think I'd rather just keep investing. And then also the thing to keep in mind is that I always have my HELOC in the background. So if ever it gets like really close, I can kind of just inject money from there. So I have like 26K in there available right now that I can kind of just pull in, and that'll kind of keep growing as I gradually pay that down as well too. So yeah, we're going to do this for the gold ETF. So if we look up IAUI and introduce that, and then TBD whether like maybe I just treat it as if like I'm buying a put, quote unquote, every month, and then I'm just going to put it into this potentially. We'll see, because I was like spending like 180, 200 a month the last couple of months when I was kind of buying the puts. So yeah, TBD. I'll have to decide on that, but I just want to get this position started here. So yeah, buy that. Cool. So that, yeah, that's everything bought. So now, yeah, with that, the portfolio is sitting at $151,781, and then it's went down again. So my buying power is up to 64,418. Margin total has crested 200,000. And this will come down now because I'm gonna have to pay my mortgage too. Margin used is at 138,954. So let's just start copying stuff over to the sheet actually. So total margin here. And I'll actually have to, I'm doing this prematurely actually, because I'm going to have to update this again for once I do my mortgage. So yeah, actually let's just put in the new position. So Meta, IAUI, QQI. So I'm just going to bring this into the portfolio here. So Meta, okay, IAUI. So I'm going to have to add this essentially. So let's just add it under here above BTC. So zero this out, shares, D472, and yeah, so that's good. I'll just update its dividend. I'll have to update Tagger and all that stuff later. But so let's just say I'll go off its last payout here. So let's just like take a quick look. So its last payout was 5,224 times 12, and that's monthly. So 627, let's say. So just that amount invested will be 488 a month. And now QQQI. So yeah, I'll just add that. Yeah, I'll just keep all the NEOS funds together here. I'll just add it here, I guess. One row below. And 5411. Okay. And then QQI's last payment, I'll have to do like an actual median of this, but for now I'm just going to do its last one and project that out 12 times. But it's actually been pretty consistent, which is nice, relatively consistent. So times 12, 749, let's say. Just to get, so I like doing that just to kind of get a rough idea of the income, right? And you can kind of see here roughly how much I'll be getting. So 748. And then also like their margin maintenance is different. Okay, no, that's 25. Cool. Perfect. So that is that. So from that buy, I'll be making an extra $39 a month from QQQI, an extra $4.88 from gold. So yeah, not adding as much as far as the monthly income, but again, like these are hopefully going to be a lot more NAV stable and a lot more consistent income wise. So yeah, just getting a position started in these, and then like, yeah, depending on the week, you know, I might maybe invest in these, maybe might invest in WPay, Ulti. So depending on what the market's doing that week. So yeah, that's stuff all updated. My market value is at 290,000 now, and my equity value at 151.8 thousand. So let's go to pay bills now. So that's that. So if we pop over to my bill paying sheet here, so my one bill this week is my mortgage, so $2,998.31. So again, as I'll do this, I'm basically just going to transfer it to my spending account, and then after the video's done, I'm just going to just withdraw it essentially from the mortgage app. So I'm just going to go from individual. So this is actually a little bit lower right now than what it's supposed to be, just because when you transfer in money from outside sources, it takes a bit for the cash to settle. So this should actually be closer to like, I don't know, 30K or whatnot. So, but yeah, I'm going to pull out the payment here and transfer it to spending. So what was it? 200,998.31. Cool. So I'm going to bring that out. Great. Transfer that over, and there's a mortgage. And then yeah, I'll just withdraw this out after the video is done. Yeah, that's the video pretty much. So like after, if we look at stuff here, so yeah, still over 200,000 for the margin total, which is nice. So I'm just gonna update these fully now. That's why I did it a bit prematurely earlier. And the margin used here. Cool. So with that, let's look at our numbers where we're sitting. So we can kind of see here that I'm at 290.7K as far as full market value of all the assets together combined. Margin used is at 141.9K. And net value is at 148.8K. So still sitting at like 55% allocation for all my growth stuff together, 45% for the income. Now my equity is at 51.18% with the rise in things to this morning, and then also just my additions now. And yeah, now my margin buffer is sitting at 49.18%. So a little bit lower than I'd like. I'd like at least 50% for this. And yeah, so like the portfolio would have to drop 0.2K to hit this margin maintenance number here, right? Or this full value, the 290K would have to fall 25%. So yeah, definitely this could happen. Like COVID fell like 30% in a month. Hopefully, yeah, it's if something like that happens, like yeah, a month is enough time for me to react to kind of get capital in there or sell specific things to kind of deleverage a bit. But yeah, definitely monitoring that closely, just because yeah, that's why I mentioned that like I feel like this number being on Robinhood, like this 49%, it's a little bit misleading, just because like yes, your net value needs to fall 49%, but really like this is the number that's invested in the market, right? And then if this falls 25%, that's the equivalent of a 49% drop on your net portfolio. So I think that's really important to keep in mind. That's why I have both here, and then I also highlight this green because this is the number I'm keeping tabs on than this one over here. So with that too, like yeah, my buying power is at 58.4K here, and then my cash available for withdrawal would be 29.2K. And yeah, right now the income is also potentially just under 6,000 here, so 5,987. So I'm well above my normal paycheck, which is great, which is 5.4K typically. So yeah, that's kind of what one goal reached. And yeah, that's what where the portfolio's at after all that. So yeah, again, the theme this week was really just reacting a little bit to the market downturn in recent weeks, and just kind of like investing into like a little bit more NAV stable and safer things. And then also, of course, still bought the dip on like Meta, so I'm not quite all hedging it. But yeah, whether the market's up or down, I'll be investing. That's my whole strategy that I've been doing for the last like 4 years. So yeah, I didn't quite catch the bottom here on Thursday. You know, you can't really predict when it's going to happen, but like overall, since I last invested in 31st, it's still like I'm investing on it being down, right? So yeah, still catching the dip and then, but it's nice to get that bounce back now too. So now I was like negative last week on my last portfolio update, and now it's bouncing back up. So yeah, unfortunately I won't have time, given that I'm not going to be able to do stuff on Friday. I won't do the portfolio update on this weekend, but I'll try to catch it maybe early next week just to catch up on what happened this week. But yeah, that's the video. So yeah, as usual, if you want to follow me off of YouTube, there's a bunch of different ways you can do that. You can do it here on Blossom Social, where you can kind of see all my trades. Yeah, you'll probably see my trades come through here. I don't know if they've come in yet. But yeah, you saw some of my buys this week as far as the early Meta buys. I had some more YouTube earnings stuff that I put into GOW, and yeah, that's kind of steadily growing. So I'm at like 1,100 now that I've gotten from like YouTube and YouTube related earnings. And yeah, you can follow as well on my Snowball portfolio. This is all free. You can kind of see basically all my numbers. So this should update in a few minutes here, but you'll kind of just see all my holdings, everything transparently, like what's in the green, what's in the red. So you can kind of really see the damage of like the downturn in the last few weeks, right? Love sharing all this and being transparent with everybody. And yeah, and then also there is Patreon as well too, where you can join us for free. And this is really just like a backup, just in case there's more YouTube shenanigans, right? You can join us for free. I'm uploading all my videos here, my full backlog. So yeah, this is just a repository in case things go haywire on YouTube. So there's a place that people can still access all these same videos for free. And yeah, and then also there is the Discord channel. So yeah, pushing past 160 members. It's a great little community that we're building here, as far as like people talking about investing and like living out their brokerage. Some do, some don't, and that's fine. But yeah, you can kind of get an early peek of like what I'm thinking sometimes. So like I was kind of talking about some of the gold stuff that I was thinking about. There's like my trade alerts too. Like you can see it. Like I messaged my meta buy earlier this week, rental income buy, my GOW buy from my October earnings, things like that. So yeah, great little community of people that you can kind of get along with. It's all for free. Again, like all this stuff is linked in the description below, and all this stuff is free. I'm not trying to paywall anything or gatekeep. So just happy to just share with people and just be transparent as usual. So yeah, if you got some value out of this and you want to keep following for the full Paycheck investing series for portfolio updates, please give me a like and subscribe on this channel, Fully Invested Fi Labs, or on my main channel, Fully Invested Fi. And again, I'm going to be back posting on there at the end of January 2026 once my strikes expire. But for now, I'm just posting on here because, as you can see, I'm kind of testing new thumbnail formats, like no mention of yields or dollars and stuff, to keep it just like very safe. Just to hopefully not trip up the automation. So yeah, I think I'm landing on a good thing here, but again, I'm just going to do this on here to be safe until the strikes expire. So I'll catch you in the next one, hopefully early next week. Happy Thanksgiving again to everybody. Hope you enjoyed time with your families and friends.